A warm welcome back from the weekend, everyone. I am Busin Omofaye, and this is your Money Moves Monday.
And I am Melissa Enoch here at the FMDQ Archives. It's Monday, August the 11th.
All right, let's get started the show, as always, with our news now. Equity Group in Kenya, the country's largest banking services group, has hosted Investors Forum today in Nairobi. Now, the meeting was held to brief investors on the company's financials in the first half of the year, as well as key operational performances for the period under review. Now, let's take a listen to some of that briefing by the Managing Director and CEO, Dr. James Mwangi.
As you can see, we have grown 3%. I want to say it is not 3% because if I was asked, I would add the 9% reduction in borrowed funds. We chose strategically to shrink the balance sheet by removing borrowed funds because they were becoming increasingly unaffordable. So that is deliberate. So if we had maintained the borrowed funds, the growth would have been different. But we have chosen to really. But what excites me about this balance sheet, for the first time in 4 years, if you look at net loans, they have grown by 4%. We're saying yes, it's challenging, but we will not abandon the people. We have developed the capability now to lead in challenging environments. The group is becoming increasingly resilient. And during difficult times, it will start with its people, with its members, and within the communities it's operating. And so I'm so excited to see the change in net loans is the exact change in cash and cash equivalent. We're now moving. And that while it's helping those who need money despite the challenges, it also means earning. Cash doesn't earn, but as soon as you migrate it. And that is the biggest opportunity we have. It's not just moving the cash. If you look at the number just below cash, that is government securities, 540 billion. It needs to go to the third line in loans. As you can see.
Okay, that's Dr. James Mwangi, the Group Managing Director and CEO at Equity Group, speaking about the latest financials in the first half of the year. Now, let's take with the East African region, where the Ethiopian Airlines today formally signed on the African Development Bank Group, or the AFDB, as the mandated lead arranger for the construction of a new multi-billion-dollar airport. Ethiopian Airlines is looking to raise about $7.8 billion from the global marketplace to construct a new Bisoftu International Airport, and that's some 40 kilometers south of the capital, Addis Ababa. When completed, the new airport will be the largest on the African continent. The Bisoftu Airport will have an initial capacity to handle 60 million passengers annually, and that will go up to 110 million passengers every year when it's in full capacity. Now let's go to Melissa for more on News Now. Melissa?
Thank you very much, Bosing. In earnings news this Monday, MTN Uganda has reported a strong performance for the first half of 2025. The listed telco giant says its total subscriber rose 10.2% to 22.8 million in January to June period, driven by network expansion. Total revenue grew by 13.1% to 1.7 trillion Ugandan shillings, which was supported by 31.1% jump in data revenue and 17.8% increase in fintech business income. The directors of MTN Uganda say the company remains focused on digital inclusion, expanding rural coverage, and working with partners on socio-economic development initiatives. In Nigeria, the NGX-listed Oando Nigeria says its net profit stays at 63 billion naira in the 6 months of 2025, as in the first half of 2024. In its published earnings report, Oando reported a 15% dip in its top-line revenue at 1.72 trillion naira, while gross profit declined by 28%. Earlier today, the directors and shareholders of the energy trading firm met in Lagos for the consideration of the 2024 financial statements. Let's now take a listen.
We do need to switch from paying interest to banks to start paying dividends to shareholders, effectively swapping bank debts for equity, which we intend to do over the next few months. We have a very aggressive program to do this, and we have asked shareholders for approval to convert up to $300 million of our current $875 million of reserve-based lending into equity. We are confident of being able to do that. We do have a baked into our loan, a conversion option or conversion pricing already identified with potential with the lenders, where they can come in as equity partners into the company at the subsidiary level. We are also seeking to raise from the markets up to 500 billion naira, and 500 billion translates to about $300 million, which, if you look at the amount of capital that has been deployed in acquisitions and the amount of capital required to drill the wells, sustain production, and maintain the business. And the business currently spends approximately $600 to $700 million per annum on working capital and capital investments. And so being able to achieve this comes from the strong cash flows that occur as a result of the liftings it has been doing. And it then utilizes a good percentage for day-to-day operations.
In corporate news, the shares of MRS Oil PLC, one of Nigeria's biggest oil retailers, was admitted for trading today on the NASD over-the-counter exchange. The oil company ended the trading on its shares as a listed firm on the Nigerian exchange on July 28th this year. In other news, this Monday, the 9th joint ministerial meeting of the Common Market for Eastern and Southern Africa, otherwise known as COMESA, was recently concluded in Lusaka, Zambia. The meeting of the Ministers of Agriculture, Natural Resources and Environment in member countries review progress and recent sector developments. The ministers in attendance highlights the role of agriculture in driving socio-economic growth and regional integration. They called for greater productivity, trade, and investment in the sector. Finally, in Egypt, the country's annual urban inflation reportedly slowed to 13.9% in July from 14.9% in June. According to Statistics Office, monthly inflation fell to 0.6% in the North Africa's biggest economy last month. The decline was driven lower by food costs, with meat and poultry index down 4.9%, fruit prices fell off 11%, and vegetable prices fell 7%. I am Melissa Enoch, and that has been your news now. Stick around for our market rounds with the Bolson at the Ticket Tape Room just after the break.
right, you're welcome back to News Now. And this is how money moves here on the market. Let's get on to start the day across the various markets and asset classes for the Monday, the 11th of August. Just get started with equities. And if you can look at the numbers coming through, quite some positive trading to start the week. And of course, a few declines. If you look at GSE, the biggest exchange on the continent, let's start from there with the GSE index down by 0.35%, but still holding the new psychological index reading around 100,000. South Africa is a bit under pressure on fiscal balance, on concerns about the trade tariff discussions with the United States, and of course the measures that President Ramaphosa and his administrations are taking to mitigate the impact, or what the expected impact will be of the 30% tariff hike on South Africa's export to the United States. That's a main figure. When we go to currency, you're going to see that as well a bit. But let's move on and show you the, talk to you about the raise. The NGX market, 0.13% today. The stock market in Nigeria moved on above, well above the 145,000, close to 146,000 to start the brand new week. The NSE was up 0.61% in Nairobi, with the Nairobi Securities Exchange now starting what you call the all-share lot, which allows folks to buy just one piece of a share of a company without necessarily buying 100 units. That was implemented just about a week ago. Moroccan stock market started the week. The index is getting close to 20,000 reading. Today, you're looking at 19,902, up by roughly 0.5%. Zimbabwe's stock market, the ZSE 203.32, that's down by 0.3%. Let me get out of equities and walk you through the government bond. And you can see the pressure coming on South Africa's bond. The 10-year paper priced today 9.655%. That's 0.26%. That's no good news, as it were, because that's the cost on that particular, the yield is climbing. That's what we saw today from investing.com around 12:52 GMT. The rest were largely flattish from where we finished on Friday, with the Kenyan 10-year paper at 13.53 on Friday. Now, let's talk about that currency, with the dollar making a bit of a comeback. You can see the pressure on the Kenya shilling, the Moroccan dinar, the Nigerian currency, 1,534.28 on the dollar, down by 0.15%, about 12.50 GMT from various sources. The rand, now around 17.78, hasn't really come back to around 18, which will put a whole lot more pressure. The central bank governor, Leseja Kegango, sent a message back to the government, essentially the finance ministry, where he says that the new threshold, which will call to the inflation targeting by the Reserve Bank, is realistic, and that is what will be done, will be held on to moving forward. That will be around 3% now. So the rand was about 0.08% positive, but of course the CFA franc in West Africa fell to 563.43 on the dollar by 0.24%. Right, let me walk you through the commodities space for today. And oil prices is in very big focus, with all eyes on the planned meeting between President Trump and President Putin of Russia later this week in Alaska. Of course, no one is not sure whether the Ukrainian President Zelensky will be attending. For now, at least it's confirmed that both President Putin and Trump will be attending that meeting. The whole idea is to secure at least a minimum of 30 days ceasefire from Russia or from its bombardments against Ukraine. That's what President Trump wants to see happen. If that deal is struck somewhat, then analysts are concerned, traders are also concerned that there could be further supply of oil out of Russia. That means sanctions could be lifted on Russia by President Trump, and that means more oil will come to the market. So the market, oil prices sort of decelerated over the weekend on the outlook, but prices started revving up today at about 12:39 GMT. The Brent was trading roughly $67 a barrel. It's causing the US WTI trading 64.25 around 12:39 GMT. Let's go to metal prices. Gold dived very sharply, 2.56%, around 12:41 GMT, $3,401 an ounce. Markets want clarity on President Trump's tariff on the bullion that he announced last week. That went essentially to Switzerland, but everyone is concerned. The White House says it's going to be a statement on that, a public statement on what President Trump meant by imposing tariff on gold bars as well. All of that we're expecting today. In the meantime, investors just took a bit of a dive on the bullion and priced that precious metal, the safe haven, lower by that margin. You saw the market, of course, not yet closed, 12:41 GMT. Then, of course, there's outlook on the US CPI for the month of August. That's coming tomorrow, Tuesday. Platinum also went sharply lower, 1.38%, 1,321. Iron ore, 101.22. News came out early today that Chinese mills producing iron ore are shutting down temporarily, and that moves that took iron ore prices sharply higher, but that is now reverting to just about 0.01. Let's finish off with the soft commodities. That's agriculture, if you want to put it that way. Cocoa prices 8,561. A bit of a pressure in terms of concerns around tightening supplies from some of the biggest exporters. Cote d'Ivoire and Ghana here in West Africa. Palm oil prices moved back to $1,000 Monday around 12:45 GMT, 1,023.74 cents. That's 3.03%. That's a big upside. Concerns are about how much demand of palm oil will India take forward, and what's the price of soybean, which is a competing product in that space with palm oil, by the way. All of that in focus this week, including, of course, the output from Malaysia and the inventories from these two major consumer and exporter of palm oil in the world. So those are some of the numbers we're chasing through for the start of the week, and I'm sure you're not missing coffee prices there. Coffee is now back to around $300, $305.15. That's roughly 1% today, Monday, the 11th of August. And that's about it on our markets round and our news now. Everything together in your Money Moves. From all of us here at the FMDQ Securities Exchange Trading Floor, we thank you for watching. We'll see you again tomorrow.